This is how the form looks like. So we're speaking here about Form 1098. So this is a mortgage interest statement for this year, and I'm showing you on the screen here the copy B for the payer or borrower. In your case, this will be you. And so basically, you have to put the calendar year this is applicable to. In this case, it will be 2023 or 2024, depending upon your situation. And we're going to leave this on the screen for a couple of seconds so you have a clear idea what I'm talking about here. So you have all kinds of information that is actually funneled through the Form 1098, okay? And so when you think about Form 1098 mortgage interest statements, it's basically an IRS form used by taxpayers to report the amount of interest and related expenses paid on a mortgage during the tax year. When that amount actually, again, the magic amount here is 600. So when that amount totals $600 or more, then you have to report it. So related expenses include points paid on the purchase of the property, and points are actually prepaid interest made on a home loan to improve the rate on the mortgage offered by the lending institution. This could be a bank, it can be an alternative lender, it can be a credit union. You have all kinds of lenders here. So when we talk about Form 1098, we're basically we have two purposes here. So lenders actually use it to report interest payments in excess of $600 they received for the year. The IRS collects this information to ensure proper financial reporting for lenders and other entities that receive interest payments. That's number one. And homeowners use it to determine the total amount of interest they paid for the year when figuring out their mortgage interest deduction for their annual tax returns. Okay, so think of Form 1098 as actually a tool that allows you to report mortgage interest paid for the year. And one thing I need to specify here is that to deduct mortgage interest, you must be the primary borrower on the loan and actively make payments. If you're itemizing your deductions and plan to claim a mortgage interest deduction, Form 1098 helps you calculate the amount of your mortgage payments that have gone towards interest. Okay, and so other 1098 tax forms include 1098C, charitable contributions, Form 1098T, credit for education payments, and Form 1098E, student loan and interest payments. I'll speak about that later on. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let me go a little granular here. So who actually receives Form 1098? Really? It really depends, okay? So your lender is required to send you a Form 1098 to you or your family, whatever, if you paid $600 or more for the previous year in interest and points on a mortgage. 600, remember that. And if you paid less than 600, you will now receive Form 1098. You can deduct these expenses on a federal income tax form, Schedule E, not A, A, as in Apple, which actually reduces taxable income and the overall amount or the IRS. And Form 1098 is actually issued and mailed by the lender or other entity receiving the interest to you, the borrower. And the IRS also requires the mortgage lender to provide Form 1098 to you if your property is considered real property. And real property is the land and anything built on, grown on, or attached to the land. Now, what are the rules that you need to really pay attention to when it comes to deducting mortgage interest? Let's say if you pay mortgage interest on a property, it must meet the IRS standards of a home to be deductible. So these standards define a home as a space with basic living amenities, and you have cooking and bathroom facilities and a sleeping area. So houses, condos, mobile homes, boats, cooperatives, and house trailers all qualify as homes. And the mortgage itself must be qualified. And so according to the IRS, qualified mortgages include first and second mortgages, home equity loans, and refinanced mortgages. So whether or not you need Form 1098 depends on whether or not you plan to itemize your deductions on the Schedule A form. And claiming a deduction for mortgage interest paid can reduce your total taxable amount. However, there are a few rules to know about deducting mortgage interest. So again, you must be the primary borrower and be making payments on the loan. And you'll be limited actually to deducting interest on a total mortgage debt of $750,000 or less if the debt originated on or after December 16, 2017. Okay, so this is really cool. Now, the limit for older mortgage debts is 1 million, but actually now they actually have lowered the bar a little bit. So if all this apply to you, you need Form 1098 to deduct mortgage interest you paid for your home loan for the current tax year. If you have more than one qualified mortgage, you will receive a separate Form 1098 for each of those mortgages. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 1098. Let's go granular further here. How do you claim a mortgage interest deduction? Well, the thing is that taxpayers don't need to include a Form 1098 with their tax returns because the information in the form has already been provided to the IRS. Instead, you use the information provided on Form 1098 if you plan to deduct your mortgage payments. It's one of those things where you are the one who really need it, okay? And if you plan to file your tax return electronically, you want to enter the information from the form into the appropriate boxes on your tax return to record your interest deduction information. And the bottom line here is that the IRS is actually tracking everything, and everything is centralized nowadays anyway. And if you are receiving Form 1098 for the first time, you may wonder how to make sense of it. And the thing is, there are 11 boxes to take note of when actually receiving and reviewing your statements. So you have a mortgage interest received from the borrower. So this actually, we're going to show this on the screen once again, so you have a clear idea what I'm talking about here. And so what I want to say here is that, so I was talking first about box one. So box one, what are we talking about here? Box one, mortgage interest received from the borrower. And box two, outstanding mortgage principal. So this box shows how much is owed on the principal of the loan. Box three, mortgage origination date. So this shows the date when your mortgage originated. Box 4, the refund of overpaid interest. If you overpay the refunded mortgage interest, it will be listed here. Box 5, the mortgage insurance premiums. So if you're paying private mortgage insurance or mortgage insurance premiums for the loan, those amounts are entered here. And so both box 6, points paid on the purchase of the principal residence. So this box shows the mortgage points you may be able to deduct. And box 7 to 11, those boxes include information about the mortgage and the property itself. So the IRS just want to have a clear idea what's really happening here. So when reviewing Form 1098, it's important to verify that your personal information, including let's say your name, your address, and test identification number is accurate. So we're speaking here about your social, for instance. Let's talk about how to deduct mortgage interest using Form 1098. It's one of those things where you have to really understand what really works in your situation. And so if you want to, you might be able to deduct the Form 1098 amount if you meet the guidelines for that amount. So you want to put box 1, deductible mortgage interest, and box 6, points into your Schedule A, Form 1040, line A. And mortgage insurance premiums from box 5 can be deducted on line 8D of Schedule A. Income limits apply only if the insurance premiums made on contracts issued between 2006 and 2022. In some cases, 2023. Actually, they are there and they apply to a new or refinanced mortgage. And so I want to say one thing though. The taxpayer, for mortgage interest to be deductible, the following requirements must be met. So the taxpayer must own the home and be legally liable for the debt, or considered an equitable owner. The debt must be secured by the home and used to purchase, construct, or substantially improve a qualified residence, and can include a main or second home, line of credit, or equity, like home equity loan. And the maximum amount of the loan must be under $750,000. I said this before, but I'm saying this again so that it's pretty clear for all our viewers. And so for a rental property, you have to use a Schedule E, Form 1098. Okay, it's one of those things where for a rental property, you have to understand that the amount you can deduct each year is subject to the original issue discount rules, and it's generally the difference between the amount you borrowed, in other words, the redemption price at maturity or on principal, and the proceeds, the issue price. And now this process can be complex, so it's just better to actually let us know in the comment section if you have any question. We'll certainly get back to you. Now, how do you report mortgage interest from personal and rental use of the same property? You must split property expenses if both apply. So part of your property was used by you, your friends, or your family, and you rent out another part of your property. So you should split expenses that apply to the entire property based on the percentage of expense rented. And so this split expenses include mortgage interest and real estate taxes. So you can only deduct the rental part of expenses from rental income. If you itemize, you can use Schedule A and IRS Form 1098 to deduct the personal part of real estate taxes and mortgage interest. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 1098, and yeah, pretty interesting. Now let's talk about vacation homes here. So here we basically, when we talk about vacation homes, we are speaking about different scenarios here. So if you did not rent, let's say if you didn't rent out a vacation home, you may be able to deduct the mortgage interest on it according to the same rules as deducting interest for a first or second home. So you want to use the Schedule A to deduct the the home mortgage interest. If you use the vacation home personally and rent it out for no more than 14 days, so you don't need to report the rental income. You can deduct the mortgage interest you paid according to the usual rules. And if you if you rent out the home for more than 14 days with personal use, this is actually, there are a couple of situations to really think about here. If a residence is used personally for the greater of more than 14 days or 10% of the rental days, then you must report the rental income. You can deduct expenses related to renting the property. However, deductions are allocated based on the days personally used and are limited to gross rental income. The expenses for personal use are deductible on Schedule A if they qualify, okay? And so you want to use these schedules to report your mortgage interest on Form 1098 from a vacation home used both personally and as a rental. So you have Schedule E. Here you have to report the mortgage interest for the first time you rented out the property. And Schedule A, you have to report the remainder of the mortgage interest you paid as a deduction. And the division, if you will, or the segregation of the expenses is based on the ratio of the number of days rented and either the number of days you own the home in the year, or you use the home for personal purposes. So the IRS just wants to make sure that you are actually allocating things properly. And it's one of those things where, because there are some consequences in terms of your tax liability, you just want to make sure that the allocation is proper and also valid. And it's one of those things where you always want to keep proper records anyway, just in case the agency were to ask some questions. At least you have proof for everything you are actually putting on your tax return. I want to go a little granular on other 1098 tax forms. I said this before, but I want to really say it again. It's important to understand that when we talk about 1098 forms, they are all related to deductions and not just mortgages, okay? And so let's first talk about Form 1098C. So this actually details the donations of automobiles, boats, and airplanes to charitable organizations that give the vehicles to those in need or sell them at a below market price. It is actually filed and reported by the recipient organization. It includes the date of donation, type of vehicle identification number, the VIN number, and the vehicle value. You also have the Form 1098E. So Form 1098E basically reports the interest paid on qualified student loans during the tax year, and this can be deducted by the taxpayer, who will receive the form detailing how much interest was paid for that tax year, and it is sent by the lending institution if at least $600 was paid in interest, although the taxpayer may get a form for sums less than $600. It really depends on the taxpayer. You also have a Form 1098T, which provides information about post-secondary tuition and related fees during the year, and the educational institution files it, and you can use it to calculate education-related tax deductions and credits. So this is kind of cool. So let me give you a few examples here. You have those credits actually include the American Opportunity Tax Credit, the AOTC. You also have the LTC, not LTC, the LLC, so the Lifetime Learning Credit. And so this form also reports any scholarships and grants received through the school that may reduce the taxpayer's allowable deductions or credits. You also have a Form 1098 MA. So taxpayers who have received assistance from the Housing Finance Agency Innovation Fund for the hardest hit housing markets. HFA, hardest hit fund, receive actually the 1098 MA, which actually they can use actually to report those payments. So you have flexibility here in terms of how you comply with the law. So the bottom line here is that when we talk about Form 1098, we are principally talking about the 1098 that relates to mortgages, okay? And it's one of those things where, if you, whether you have a form, whether you have a first property or second property, you're basically able to reduce your tax liabilities. And but see, the Form 1098 actually applies to the federal when you file your taxes federally. So for state-wise, you might qualify for a deduction also at the state level, but you have to really contact your state authorities to see what's applicable there, or you can let us know. Let us know in the comment section what's applicable to your situation, and we'll get back to you and really give you more guidance. One thing I want to say here is that at the end of the day, when you file your taxes federally and you actually write off as much as possible, you are basically putting yourself on the right position to actually to manage your cash properly. But don't forget that we have several types of 1098. So when you actually, if you qualify, let's say if there's 1 year you qualify for one form, if you don't get it, it's just better to contact the lender. It is your responsibility as the taxpayer, because you will be the one who actually benefits from those Form 1098 at the end of the day. So this is in your interest to actually contact the company to let them know, hey, listen, we're here, we're like February 5th or February 10th, and I haven't received anything from you guys. Can you please advise? And it's one of those things where you have to keep trying and trying before they send it to you. And it is their responsibility anyway. It is a duty. It is a legal duty for them to actually respond. And also, one thing I want to say before closing to this conversation is that Form 1098 mortgage interest deduction is basically an IRS form for notifying a borrower how much interest he or she has paid in 1 year on a qualified home mortgage. The key word here is qualified home mortgage. It has to be qualified. And you should receive one in January if you have a mortgage, and are able to claim the interest as a deduction if you itemize your tax return properly. And you want to be in a situation where you are itemizing your tax return properly, so you have a clear idea what's really happening here, and you can really file your taxes a lot faster. Thank you so much for your attention. I really appreciate it. So let's quickly do a recap here. So in today's conversation, I was talking to you about Form 1098, and I gave you a little bit of the overview, and then now I'm doing a recap. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.